Hello friends, welcome back. So today in this video I want to share you guys how I'm saving some money with my mortgage. If you guys watched the last video, I was basically just talking about how I'm trying to save money to pay off my credit card debts or any other consumer debts that I have. I did take some time to put those numbers together. I think I'll try to share that next week in a video. But I just had this idea just to kind of share one of the ways that I am actually saving money this year, just to kind of help me, save money to pay other consumer debt. Anyways, if you guys are new, welcome. My name is Esther. If you've been here before, welcome back, and thank you guys for tuning into another video. So I'm going to be sharing with you guys how I was able to bring my mortgage down for the next 9 months, because typically they do my analysis in December, and I tried to budget for that, but I don't ever know exactly what it's going to come out to, because insurance goes up as well as taxes. So there's normally a shortage on my escrow account. So I'm always like on the limb. So typically they do it the second week of December, and I get those numbers like the first week of January or so. And I like to kind of plan for that. I had a shortage for my escrow. And typically I shop my own insurance. And I kind of learned this early on because I would always help my parents with their mortgage and stuff like that. So I kind of like understood what it meant when you had insurance from the mortgage versus when you shop your own personal insurance and things like that. So when you get insurance from the mortgage, it's just hazardous. I can't say that word, but it just covers just the dwelling. Really, it doesn't cover your personal needs, or like, let's say, your couch got caught on fire while the house was caught on fire or anything like that. It doesn't cover anything else inside of the house. Like, I know when we were shopping, there was like one that covered water damage, just a whole lot of things. So I typically look for, maybe I can put a screenshot of what my the quote that they gave me looks like. So yes, so the escrow, pretty much, if you have a mortgage, is where you pay the mortgager. So for me, it's US Bank. They collect that money on a monthly basis. So by the time it comes for them to pay it in full, they'll pay that. So they collect money for the insurance as well as taxes. Now, since this is our first home that we've bought with this type of loan, we have what's called a PMI. I couldn't tell you what it stands for right now, but it's like a protective insurance for the mortgage that does not go towards the home. That's just an extra money that you're just paying there. I've called to try to get this removed, but they told me I have to refinance the home. That's kind of like the only way to get that removed. There are other ways to get that removed, at least in my case. The other ways to get that removed is if you've been in that mortgage for more than 5 years, and you've paid towards that, they can actually get it removed. But because I think I have an FHA loan and I had to refinance into a conventional loan, that's the only other way to get it removed. And right now, with interest rates and the way my credit is, we couldn't get anything refinanced. So that's just money that we're paying for that. So that's just like the PMI. Anyways, so when my escrow was short, it was like really, really short, because my insurance went from like $3,000 to like $4,500. So our mortgage literally went up by almost $300, which I was like, oh my goodness, this is ridiculous. And for the last few years, I could not shop for other insurance because we had an open claim from 2020. So we finally got it closed out this year, I believe. Earlier this year, I think we got the claim closed out. And since we've been in this battle with the insurance for 5 years, it didn't count against us that we had an open claim for the last 5 years. So thank God that didn't count against us. So I'm just going to share some of the numbers with you. I just have them written down here just to do the math. But basically, our mortgage went from, oh my gosh, 1662 or something like that. I'll put the numbers up here, to 1881.10. So we went from paying $1,600 to $81.10. And then after getting the new insurance in, which we didn't do that right in December because I didn't think that I could shop for a new insurance because of the claim. Anyways, so after getting the new insurance, our mortgage went down to $1,688.43. So thank God. That is a difference of $192.67. So I'm so grateful for that. So what happened was, when we shopped for that insurance, we let the mortgage insurance and the mortgage know, and they sent the payment to them, even though they had already made a payment to the last insurance that we had. They still went ahead and paid, and the insurance company sent us a check back, which I then had to deposit in my account, and then to make that payment in full, so that they can recalculate it so we can get a lower payment. So the insurance actually refunded us $2,935.42. And the amount that I had to pay to bring the mortgage down was $2,784, which left us with an overage of $151.42. So, which was great. It was extra money in our pocket. However, it wasn't, because in order for us to get the lower insurance that we wanted, we had to do what's called a 4-point win mitigation. I'm probably missing some words. I'll put it up in the screen if anything. But there's 2 different inspections we had to get done in the home just to make sure everything was up to par. We did get a new roof last year in June, so that count for us. Our water heater, AC, and everything like that is less than 10 years old. So I think that also counted. But for the 4.1 mitigation, we paid I think it was $180, and I tipped the guy like $10, so $190, which means with this $151 coming back in our pocket, that would have only cost us about $30, which is great for us to save $192 a month. I'm really happy for that. And so doing the math, if I had done this earlier for the 12 months, we would have saved $2,312. But because I've already paid for March, April, and May, our June payment is when we're going to start paying this new payment. So that's going to save us a whopping $1,734.03. So I am so excited for this, because being the fact that our income, we're normally short. So that's the problem, is like our income versus expenses, we're short there. It doesn't go on, and that actually is a big help. So if I didn't get this insurance done, I already know that looking at our end year debt, we would have been over almost $2,000. So I think there are different ways you can shop for mortgage insurance. You could just, call up different companies online. What I normally do is I go through through an agent. They do car insurance. They do mortgage insurance. Those are the only ones I know that they do, but I'm sure they do other things too. Because typically I do car insurance through them as well as my mortgage. So yeah, this is very excited for me, just to save a little bit of money. If you guys have any questions, I'm still learning a whole lot myself, but one thing I know I will do is some research. So if you have any questions or need any help, or just want to talk about your experience with this, please share it in the comments below. Yeah, I'll see you guys in the next video. Bye-bye.